the most valuable company in the future may not be listed on the stock market today, and that company could already be worth more than some of the biggest corporations on earth. But here's the question that has investors losing sleep at night. If SpaceX ever becomes publicly traded, how high could its stock actually go? Because hidden behind the rocket launches, the Mars dreams, and the headlines about Elon Musk lies a financial story so massive that some analysts believe it could create one of the biggest wealth-generating opportunities in modern history. And yet, others believe investors are dangerously underestimating the risks. The truth sits somewhere between ambition and reality. And finding that truth begins decades before SpaceX became the most talked about private company on the planet. Back in 2002, Elon Musk wasn't the world's richest man. He wasn't a cultural icon. He wasn't sleeping in private jets. He was a freshly successful entrepreneur who had just sold PayPal and walked away with a fortune most people could never imagine. For almost anyone else, that would have been the finish line. For Musk, it was only the beginning. While Silicon Valley celebrated internet startups and software companies, Musk became obsessed with something far more dangerous: space. Not because it was profitable, not because investors were demanding it, but because he believed humanity's future depended on it. The idea sounded ridiculous. Rockets were for governments. Space exploration was a money pit. And private companies entering the industry usually ended in bankruptcy. The odds weren't bad, they were catastrophic. Yet Musk poured nearly everything he had into a company that many experts expected to fail. The pressure was unimaginable. Every launch mattered, every dollar mattered, every mistake could destroy the entire dream. And then the failures began. The first rocket exploded, then another, then another. Millions of dollars vanished into fireballs over the Pacific Ocean. Employees were exhausted. Investors were nervous. The media was preparing obituaries for the company. Most people watching believed the story was over. But the real story hadn't even started. Because in 2008, with cash running out and disaster looming, SpaceX launched one more rocket. One final chance, one final gamble. If it failed, the company would likely disappear forever. The countdown reached zero, the engines ignited, and this time, the rocket reached orbit. Suddenly, everything changed. NASA noticed, investors noticed, the world noticed. A company that had been standing at the edge of extinction was now being viewed as the future of space exploration. But nobody could have predicted what came next. Winning contracts was one thing. Transforming an entire industry was something else entirely. For decades, launching anything into space was brutally expensive. Governments accepted the costs because there was no alternative. Then SpaceX introduced a radical idea. What if rockets didn't need to be thrown away? What if they could land and fly again? At first, critics laughed. The concept seemed impossible. Rockets crashing back to Earth and landing upright looked more like science fiction than engineering. But slowly, launch after launch, failure after failure, the impossible started becoming reality. And every successful landing sent a message. Costs could fall, barriers could collapse, a new economic era could emerge. Investors watching from the sidelines began seeing something far larger than a rocket company. They saw a platform, a monopoly in the making, a machine capable of generating enormous cash flows for decades. And that's where the stock prediction story truly begins. Because most people think SpaceX is about rockets, they are looking at the wrong business. The rockets are spectacular. They dominate headlines. They create viral videos. But the most important asset may be orbiting thousands of miles above Earth right now: Starlink. At first glance, Starlink sounds simple. Internet satellites, nothing exciting, nothing revolutionary. At least that's what many people assumed. Then the numbers started appearing. Thousands of satellites launched, millions of customers added, entire regions connected, revenue accelerating faster than many analysts expected. Suddenly, investors began asking a dangerous question. What if Starlink eventually becomes larger than the rocket business itself? What if the company generating internet revenue across the globe becomes more valuable than the company launching rockets? The implications were staggering. Because recurring subscription revenue often receives much higher valuations than transportation businesses. And if Starlink continues growing, SpaceX may evolve from a space company into something much bigger, something far more profitable. But there was a hidden problem, a problem that few people wanted to discuss. Success creates expectations, and expectations can become deadly. As SpaceX's valuation exploded higher, investors began assigning enormous future growth assumptions to the company. Each funding round seemed to produce a new record. Each valuation appeared more unbelievable than the last. One year it seemed expensive, the next year it looked cheap, then expensive again, then cheap again. The numbers became almost surreal. Hundreds of billions of dollars, valuations rivaling some of the largest public companies in the world. The excitement was intoxicating. The fear of missing out became impossible to ignore. But history has a habit of punishing excessive optimism, and that's where the uncertainty enters the story. Because predicting SpaceX's future stock price isn't really about predicting SpaceX. It's about predicting the future itself. Will Starlink dominate global internet infrastructure? Will competitors catch up? Will governments support expansion? Will regulation become a barrier? Will launch demand continue accelerating? Will Mars ambitions create value or destroy capital? Every answer changes the outcome, and every outcome changes the potential stock price. What happened next shocked many investors. As analysts began building long-term models, the predictions became wildly different. Some estimated future values that seemed conservative. Others projected numbers so large they sounded absurd. A few even argued SpaceX could someday become the first company worth several $trillion. Not because of rockets, not because of publicity, but because of infrastructure. The invisible systems connecting Earth and space, the transportation network linking industries, the communication network linking continents, the economic ecosystem emerging above the planet. If that vision becomes reality, today's valuations may eventually look small. But that's a massive if, and investors ignore that word at their own risk. Because hidden warning signs always exist during periods of extreme optimism. One warning sign is concentration. SpaceX remains deeply connected to Elon Musk. His vision drives the company. His ambition attracts talent. His reputation attracts attention. But dependence on a single leader creates vulnerability. If leadership changes unexpectedly, investor confidence could shift overnight. Another warning sign is competition. Today, SpaceX appears dominant, but dominance attracts challengers. Governments, defense contractors, international rivals, and emerging startups are all studying the same opportunities. No empire remains uncontested forever. And then there's execution risk. The biggest fortunes are often destroyed not by bad ideas, but by ambitious ones. Every new project introduces uncertainty. Every expansion introduces complexity. Every breakthrough requires capital. The higher expectations rise, the harder they become to satisfy. Yet, despite these risks, enthusiasm continues growing. And perhaps for good reason, because few companies in history have achieved what SpaceX has achieved. Few have redefined an industry. Few have lowered costs so dramatically. Few have built such powerful competitive advantages in such a short period of time. This is why investors remain fascinated, not because success is guaranteed, but because the upside appears extraordinary. Imagine for a moment that SpaceX eventually goes public. Imagine millions of retail investors rushing to buy shares. Imagine pension funds, hedge funds, institutions, and sovereign wealth funds all competing for ownership. Demand could become explosive. The narrative alone could drive enormous interest. But narratives can be dangerous because stock prices and company value are not always the same thing. A great company can become a terrible investment if expectations become unrealistic. History is filled with examples. Companies that changed the world. Companies that built revolutionary products. Companies that still disappointed investors because the future had already been priced in. This single reality changes everything. The question isn't whether SpaceX is extraordinary. The evidence already suggests it is. The question is whether future investors will pay a reasonable price for that greatness. And nobody knows the answer. Not Wall Street, not Silicon Valley, not even Elon Musk. Because the future refuses to follow spreadsheets. The future creates surprises, sometimes beautiful ones, sometimes brutal ones. And SpaceX has always been a story built on surprises. A company expected to fail that survived. A startup expected to struggle that dominated. A rocket company that accidentally built a telecommunications empire. A private business that became one of the most valuable companies on Earth without ever offering shares to the public. The irony is remarkable. Millions of people obsess over a stock that doesn't officially exist. They analyze valuations. They debate future prices. They calculate trillion-dollar scenarios. Yet nobody can buy the company on a public exchange today. That alone reveals something powerful. Investors are not just betting on earnings, they are betting on a dream. A dream of reusable rockets, a dream of global connectivity, a dream of humanity becoming a multi-planetary species. Dreams are incredibly valuable, but dreams are also dangerous because they blur the line between possibility and probability. And understanding that difference may determine who wins and who loses if SpaceX ever becomes publicly traded. Years from now, investors may look back at this moment and laugh at how small today's valuations were. Or they may look back and wonder how expectations became so detached from reality. Both outcomes remain possible. That's what makes the story so fascinating. Every rocket launch, every satellite deployment, every funding round, every technological breakthrough, they're not just engineering milestones, they're clues, pieces of a puzzle that investors around the world are desperately trying to solve. A puzzle whose final answer remains hidden somewhere in the future. Maybe SpaceX eventually becomes worth $1 trillion, maybe several trillion, maybe far less. The truth is that nobody can predict the exact number. But the deeper lesson isn't about stock prices at all. It's about understanding where extraordinary value comes from. The greatest opportunities rarely appear obvious in the beginning. They usually look risky, uncertain, uncomfortable, sometimes even foolish. SpaceX was all of those things. A company born from repeated failure. built through pressure, forged by desperation, driven by impossible ambition. And whether its future stock price ultimately soars beyond imagination or falls short of expectations, one lesson will remain. The biggest fortunes are often created by people willing to build what everyone else believes cannot be built. Because in the end, markets reward profits, but history remembers vision. And sometimes, when vision survives long enough, it becomes something far more powerful than a stock price.